Good afternoon, everyone. Brett Crowther back with you for Short Verticals. Thanks for joining me today. We got a lot, as always, to cover. We're going to review those open positions. We're going to look at some new positions. I want to talk to you about, I've covered this again about sabotaging your trades and not really knowing it. But I've just seen a lot of talk about, setting some targets, setting some stops. I want to go through just some of the mechanics of it and the good and bad of it. All right. And so we'll cover that as well. But a lot to discuss. Hey, good afternoon, everyone. Ricebird, Robert, speakers, Gary, Sharon, Greg, Richard Judge. How are you? Lots of you out there. I mean, I can't read them all. So good to have you with me on this Thursday. Well, afternoon. It just turned afternoon, my time, mountain time. So it may be still good morning to some of you on the West Coast and good afternoon on the East Coast, huh? All right. So before we get too far into it, though, let me cover a couple of disclosures, get those taken care of. So do remember that options do carry a high level of risk, not suitable for all investors. The information that we cover is for general informational purposes only, not to be considered an individualized recommendation. Um, uh, Paper money trading is for educational purposes only. Short options can be assigned at any time, regardless of the in, out, or at the money. Investing does involve risk, including the loss of principal. Past performance is no guarantee of future results. And then there's your options or your Greek definitions. And do know we will probably talk about a stop loss today, and the stop loss is not guaranteed to fill at the price entered. It can come a market order and that can fill at a different price than where it's set. So do be aware of that as an important item of business to cover. All right. So back to where we're at, and it looks like, let's take a look at the market first off. And it's interesting, as we come in here on a Thursday, looking at, okay, what's going on in the market? How are we coming in to the kind of getting close to the end of the week? How are things starting to shape up? And really, there hasn't been a ton that's happened since last time we met. I mean, we were here on the 23rd, right? So it was right there is where we were a week ago. And right now it's been basically sideways ever since then. And so we talked about it possibly coming back. This was the Fibonacci level as a reminder of why that box is there. We came down, we grabbed the Fibonacci drawing tools, we drew some Fibonacci's from this low up to this high up in here, and then from there we're looking at where price action could potentially pull back to, and we noted that this is kind of the ballpark area that 1/3 to 2/3 retracement is generally considered for many technicians kind of that area where, let me zoom in on this, let's make sure we can see this a little more clearly, right? This is the area where you typically consider it a retracement because, sometimes when something's going up, you get a 1-2 day hiccup. That's not necessarily enough to relieve the legs a little bit. If something's been running real hard, it tends to need a little bit of a breather more than just like, a hiccup here and there. However, with that said, it doesn't mean that it can't just take a little sideways breather. Sometimes it gets up there, sits on the ledge, it looks out over the valley, and then, after that rest, takes off again. And so when it pulls back, we often call that a bull flag, right? Well, some will often term it, when it goes sideways, a bull flat. I don't know if you've heard of that before. Something like we've seen these in the past. Let me just see. There's some over. Let me back out here and I'll grab one. Even like right in here, it ran up and then just kind of chopped around, went sideways for a while, and then up again. Let me pull some more in here. Here's a good example of it, right? Ran up. It really didn't pull back right in this. This is a pretty good run up. Let me pull this in just a little bit more even. And without going out to a longer term chart, you can see it ran up. It really didn't pull back much. I mean, we didn't really get that, 1/3 pullback from where it started down here. And it just went sideways for about 2 weeks and then it ran again pretty good. And so just, after a run up, it doesn't mean it has to fall back. It often does, take a little bit of a breather, but it doesn't mean it has to. And again, that can be sideways. And so right now it's taking a little bit of a breather and it's looking like today it's starting to move back up again. We got the RSI going into the upper reversal zone once again, or close to, which isn't surprising. A lot of times it can go up there. Like this is, I think, a really good example of it, where it pops in that upper reversal zone, drops out, maybe a little hiccup right there, but then runs back up. And it's usually the second time that it will tend to carry more weight and be more of a, okay, this time it really is getting, weary in the legs and ready to pull back a little bit. Now that doesn't mean it has to change trend. That often will indicate possibly a pull back to support. All right, here's another good example of it where it ran up into the upper reversal zone, matches this spot right here. Let's make that just a little bit bigger so we can see the corresponding movement. So this right here is just a couple three-way pullback. When it went up the second time, well, that was right next to this big drop that it had right there. And so saying, okay, yeah, they ran out of gas and actually slid back, maybe covering some shell or something on the hike that, was kind of slippery, and they pulled back a little bit. And so keep that in mind, right? Keep that in mind as we assess what's going on. But for now, still bullish, pushing higher. And so with that, I'd like to use that as kind of the basis for what we're looking for in our potential paper trades. And I know, a lot of you have said, hey, let's play some bearish trades. And while we can play some bearish trade, I've, explained this with, I like to do a lot of cycling. Been doing it for years and years and love it. And the best thing you can always get is, a tailwind and a slight downhill. That's the dream on a smooth road. That's the dream for a cyclist, right? Well, you can go any direction. You can go, with the wind, and you can go against the wind. But it sure is easier going with the wind behind you, pushing you versus kind of, combating that. And a lot of times stocks will act in a similar fashion where, if the overall market is lifting up, then it'll help push all the stocks up more so, right? To go with the overall market tends to be add just a little more emphasis or a little more energy towards those stocks versus fighting the overall market. And so that's what we tend to like to go with that overall market, and that's what we'll be looking for. But before we get into looking at some new trades, let's look at what we had before. And there's a couple of them. In fact, let me start off with there were some that I placed that didn't actually get purchased, unfortunately. But I just want to follow up on them because I know a lot of you talk about them and look at them for paper trade examples and stuff. And this is one that we set and it didn't quite get filled. I think I put it at 120 and it just missed it. But for those of you who may have caught that on the paper, you can see we entered when it gapped up and it's holding a support line over in here, right? And then right here is holding the support. We look to get in the trade. And then since then, it's just kind of been bouncing around and doing well. And so this is one of those instances where, it's just waiting till it gets closer to expiration, looking to take the profit off the table. Selling it for 120, look to buy that back when it gets down maybe 10%, like 12 cents or, 20 cents, somewhere that, 10 to 20 cents would give us about most of profit, 80% plus on the profit side of there. And we can even check that, we're getting $1.20. So let's do it at 120 times 0.2 would give us about 24 cents is really where we got 80% of the profit on that. And so that gives us, a potential target area to look for if we're looking to get, a chunk of that and pull that off the table. So that was one of them. Another one that we were also looking at, CVX. Let's pull this one up. Oh, actually, I want to share, before I move on to that, I want to show you something from a technical aspect on this one that I thought was interesting. Let me pull this back down here. Let's get this. We can focus on price action. So this is one of those examples also where we've had a couple things happen. It's run up. Let's look at the fibs. I'm going to draw it from this low here up to that high. It's run up and look at how it's kind of pulled back. This was at 38.2%. Notice how that acted as a support level. So, we could visually see that it acted where the gap was. And I think it's just really interesting. We have a lot of these things converge, meaning we have the gap on price. If you can see that, let me pull this up just a little bit so we can see it a little more cleanly. See where price action was right here? And then it gapped up the following morning. Well, when it gaps like that, that creates areas of support. And in this case, you can see it has been holding for a bit, right? And so that is one way to look to say, okay, how significant is this level of support? Well, gaps create it. The more times it touches it, helps make it reinforce it. And then it's interesting when we throw the Fibonacci's on there, that's what we're getting as well. And then one last thing I want to do, if I can pull this back down just a little bit more so we're not quite so tight on that, is I want to extend this out. I want to extend these to the right. So by the way, I'm just right clicking on this, on my channel. This is a channel that I drew. And if I extend it out to the right, then it'll also give us other areas of potential support in the future and also some areas of potential resistance. Now it's not perfect because we were coming off of these levels back in here, right, which it broke through, but it's just something to kind of keep in mind, like in the back of my mind, thinking, okay, this could potentially be a spot because it's broken through the bottom and it's broken through the top. It's not as strong, right? But the fact that it was there is just something to kind of keep in mind. It is like a little bit more of a support level. And it's interesting that we're going to have that 50, I think it's 50, yeah, 50 period simple moving average close to that lower support level. So a couple areas below where we have our horizontal for support and just a light one up above. This is really isn't being that strong. You can see that one didn't really hold after all this move. Let's actually remove that. And so we can edit that and take off that 50%. There we go. It's kind of there, but it's not super strong. And something to always keep in mind is just like looking at the past history and pulling that over to the present, and even sticking it out, extrapolating it out into the future to see where some of those things might end up. All right, let's go over to CVX. Let's snooze that. Let's go over to CVX. Right. And this was also one that we were talking about. On this one, we looked to do, like 6 contracts at about 90 cents each. And on that one, it was just another one of those Fibonacci plays, where we saw it come down, bounce off this support level. Let me back out so you can see this a little bit better. Maybe that's better, right? So we can see it held on that support. Now I want to note that, this is the ballpark area where we're looking for it to bounce. Typically the 38 is the first one, obviously, on that retracement. However, it's not necessarily the strongest. A lot of times it's kind of that general area. And so some will look for the 50 to be kind of the key point. And this one did actually find more support down on that 50 as it broke through to 38. And then it bounced and kind of headed up. Now, this is what's interesting about this one, though, is we went to place the order on this date right here where it was sitting, bouncing off that support level. Look at what happened the next day. And this is very, very important. I really want to stress the aspect of we got to sit on our hands and be patient with these types of trades. One of the benefits, well, there's good and bad here. One of the benefits is time is on our side, right? Meaning if it's holding in the right spot, time is working for us. But one of the things we've got to be careful of is just moving too quickly when things maybe don't look as favorable. And this is one of those situations where, okay, so it broke down below the horizontal support that we put in here. It was kind of back below that 38, but kind of expecting a potential bounce of that 50 when it came down here. Is that a reason to get out? No, not necessarily. It wasn't out of the range of coming back within that zone, and it pulled back up. But there's so many days like, oh, it's still down, it's still down, it's still down. In fact, let's zoom in on this a little bit more so we can kind of talk through it. I'm going to do this. I'm going to pull it over like this, right? So this is a situation that we're looking at. When we hop in the trade here, all of a sudden, boom, we get in the next day, whammo, it's looking bad, right? And we're like, oh, why did we do this? Oh no. And then, it pulls up a little bit, but it's still red candle. We're thinking, oh, that's too bad. Now we're saying, okay, it's feeling a little bit better. Maybe, the next day, okay, we're getting good, but oh wow, is that a shooting star? Oh no, is next day going to be awful? Wow, I should just go ahead and hop out now before it becomes something awful, right? We start talking ourselves through all kinds of, doomsday scenarios on these trades. And I've done it myself. I've seen others do it. It happens, right? But really, we have to ask ourselves a question, is it okay? And it is. The answer is yes. In fact, it's above where we need to be at expiration. Next day, still hanging out there. Now, really, we'd love this to run up. Give us some peace of mind. Make us feel a lot more comfortable, right? But it did not decide to do that. But the question is there something wrong? Now, this day it dropped back down. It's still in that ballpark, though. Climb back up, climb back up. Climbing. Okay, now look at this. So this is what we're looking to get out because it expires tomorrow, right? There's nothing necessarily wrong with this. But again, oftentimes, we can get a little bit too emotional, a little caught up in it, and go ahead and jump ship. And again, this is where I gotta tell you, gotta sit on those hands, right? Okay. Oh wow, Sharon, you're going back a ways on your comment there. Oh wow, she remembers when I was teaching this stuff 20 years ago. Oh boy, that's going back a bit. All right, so there's 2 of them. Let's look at the other one that we still have on there, and Netflix, NFLX. All right, so what's going on with Netflix? Well, let's see here. In fact, I want to pull this up a little bit more. Here's a support line that we're looking at, right? And let's pull this over just a little bit more. So let's activate that. We're going to drag that. I'm trying not to move it too much. Drag it to the right a little bit, and we'll drag it out to the bottom end of our box. I'm trying to keep it where it was. There we go. And then here we go. It came down. This is where we hopped in. And again, this is always interesting. Let's go back to what happened since we hopped in. That's what we were looking at when we hopped in, hoping that it'd rally from that point, right? We sold, I can't remember which one we sold. I think it was 91.89. So we were looking for it to stay, somewhere up in this area, obviously down down here, maybe a 90.89. But it came down, it came down. So after we got in, it did nothing but come back, right? And this is where, if we're in a long call, that thing's getting hammered. It's losing on the delta and it's also losing on the theta. And so it's getting a double hit here. However, this one started, I found a little bit of support here, give us a little bit of a breather. And then next day, and hold on. Sorry, I feel like I was going to sneeze for a minute. So that's why I was like slowing down. I think I'm okay. It's finding that support level. Again, nothing wrong, not uncomfortable, or a little uncomfortable, but nothing wrong. And then look at this, it bounces up, right? And so we sold 6 contracts on that, and we pulled in 49 cents on that. Let's go ahead and check that one out. Go over to monitor tab. Let's go over to activity and positions. And we're up 96 bucks, right? So, and look at this. This is $129 for today. So we're down just a little bit. We're down about 35 bucks or so prior to today. And so up to this point, we've kind of been sitting here in a negative position, feeling like, oh, gee, I don't like being negative, right? We want to get in the trade and we want to feel like it's, we want to be positive from the moment we hop in. But again, nothing wrong with it. Got to sit on our hands, let things kind of play themselves out. Now, this is also interesting because if we look at this, what about a potential another entry point? Could this be a spot to get in? Do we see kind of a stock bouncing off support? Maybe if we're looking at a hold. For those of you attending the virtual workshop that's been going on, they've been talking a lot about a hold, a close above the high of the low day, which is basically what we saw the stock drop down here. And we picked this up maybe just a little bit early. It wasn't quite at support. If I can get that to zoom in there, it wasn't quite at support as it was making its way down. Then we're looking for this to continue on lower, and it dropped down. And so the question is, when it gets down support, we're pretty close to that support level. The hold idea is, when will it bounce, right? And by the way, Ben Watson teaches a lot of this on the road. If you attend one of the live workshops, I'll show you a little bit more of that. But I just want to also announce that Ben Watson is also my good friend handling the chat right now. So give a shout out to Ben. Good dude he is. All right. Now here we are. Now it's coming down, and look at this. Now it's at support, and this is the low point. It keeps, if you look at these lows, we have a low, and let's mark these up. Let's grab a pen. So we have a low here. Nope, that didn't grab it. Hold on. Let's see if we can get this again. Try it again. Got a low there, a low there, a low there, and this is the low. Maybe I should change the color so it's not conflicting with our green box, right? There, well, and there's our lows. And so what we're looking for is, right now, this is the lowest point. We'd be looking for a close above that high point on that day. So let's just see what happens the next day, right? Let's go to next day. And did it close up above it? No, it didn't. Now, did it make a new low? No, this is still the low day. And so we're still looking for it to be, we're looking for a close above the high low day. We're looking for it to close up above this spot, because that's the high point, right? Let me just kind of make that even a little bit bigger so we can spell that out. There's the high point of this low day. So as we came back to support, this is the lowest candle. Everyone with me on this? We good? All right. Okay, good. And then we can see it hasn't closed above that high. Well, let's give it another day. Boom. Okay, now, did we make a new low? No. The lows are getting higher, right? So this is still, come on. Let me get my cursor. Go right there we go. There's a low point. So we haven't made any low. This is the low, and then there's the high point. We need to close above that spot, which it did. Or it will, and it's looking very probable that's going to be the case as long as it closes there today. Okay, so here's a question. Can we go ahead and play another play on Netflix? We already have one. Can we do another? Well, sure. Nothing says we can't do it again. And I want to bring this up that you can layer them on, and this will prepare you for additional classes that you may take down the road. It's more of the advanced options, or if you get into portfolio or an option management in your portfolio, where you get to a point where you're actually not even looking hardly at charts. You're looking just at your Greeks and saying, how do I manage these Greeks? But you start layering them on. But it all starts with where we're at right now, looking at the chart, finding a play, looking to add on to that, even that same play again. It won't be the exact same play. In fact, let's go out and look at it, all right? So let's go over to the trade tab here. And on the trade tab, we have the May one right here. We have the 90.89 position, right? And so that's on the May 15th. That will expire in about 2 weeks, right? So let's go down a little bit more. Let's go out to maybe the May 22nd. I mean, a week's gone by. Let's see what this one offers. And looking to get somewhere in that 30 to 40 delta, I'm going to have to change this so I can get a delta on there. So I'm going to come in here and click on Delta Gamma Theta Vega right there from this box right here. This will give us an approximation of, the likelihood of expiring in the money. Looks like the 92 maybe is giving us a 36. So we could go with that, or even, let's see, it's been climbing since I looked at it. The 91 is a 31. So we can go with either one of these. Let me just see what the 91, and I'll go a 91. I'll do two wide, kind of match what we had before. We'll go a 91. Wow, delete all this. Try it again. 91. And then I'm going to hold down my control key, go over and click on the ask of the 89. What are we getting here? 52 cents. It's moving up on us. It's moving on up. It was 60 a little bit earlier. Let's just see what this one's giving us, the 92. So 92.90, that's giving us 64 cents. And so and that's still only what, a 36 delta? Let's look to play this one out, all right? Now, if we go ahead and look at this trade, we got a $2 difference here. And so again, we're selling the 92 put, which means that, we're on the hook to buy the stock at $92, right? But then we're also buying, we're taking some of the proceeds of that, and we're buying the 90 put, which allows us to then sell it to someone else. And so the risk on this is $2. The credit that we're getting between, selling the 92 and buying the 90 is 63 cents. And so, if it goes south, it's below 90 at expiration, we're going to lose $2 on that, but we'll keep the credit. And so if we keep that 63, let's lock that in at 64. In fact, let me just make numbers easy. I'm going to make it 65. So maybe we can get that. We could probably get that out of there. So I'm going to lock that in. Just as I do some math, it'll help us out here. And so $2 minus the 65 is going to give us $1.35 risk, right? And so we're close to a 50% return on risk. So if we have 65-cent credit and $1.35 risk, we come out about 48%, okay? All right, good. Now, here's what I want to do. Let me just check this out. So we've been using $1,000 of risk in this class. And if I divide that by the $1.35 that we have on this trade, it's going to save by 7.4 contracts, which, we can't buy a fraction, so we'll have to just round that down to 7. And so I'm going to change that to 7. Now, here's what I want to do. So there's always talk about, okay, could we place a stop? Could we place a target, and all that stuff? Yes, we can. Yes, we can. But I want to walk through the good and the bad and the ugly of this, okay? So first thing we need to do is we're going to come down where it might have, whatever you have here, I'm going to change that to first triggers, one cancels other, OCO, one cancels other. Get that down there, right? And then what I want to do is come up anywhere on here. I'm going to right click on this order and I'm going to create the opposite order. All right. I'm going to do that twice. Create opposite order. So this is saying we're going to get in this trade. So we're going to sell this to get in. Then we got to buy it back to get out, right? Sell the entry, buy to close. So there's a couple things here. First off, let's change this. And if we're looking to get out at maybe 10 to 20%, meaning we took 80 to 90% of the profit, well, it's pretty easy. Like, if we're doing, I usually just do it in my head. How do I describe this? Like, I just, if it's 65 cents, well, 10% of that is going to be $6 or $6, 6.5 cents, right? And then if I double that, that would be about 12, 13 cents. And that's going to be your 10 to 20%, meaning if I have 65 cents times 0.2, which is 20%, that's going to give us 13 cents. You see that? And so here's what I want to do. I want to come down here. I want to say, okay, let's do this. Let's get out. Let's buy this back at 13 cents. And I want to make sure this is at a good till, not a limit. I want to leave that a limit. Sorry, good till canceled. In fact, I want to change both these to a good till canceled. All right. Now, some will say, hey, let's go in there and also place maybe a stop. Let's say it goes up to $1.20, almost roughly doubles what it has. I'll get out. And, I've heard a lot of people say doing stuff like that. Well, first off, I want to cover two things here. Are the orders correct? Do we have it where if it says, okay, if it drops down, get us out. And if it rallies up, get us out. Well, this can get confusing on what is the order, because I know we're going to buy it back, but is it a stop? Is it a limit? Is it a market? What is it? Well, one of the easy ways to do that is just come over to the right hand side here and just click on that little icon right there. I know it's a little teeny gear over here. If we click on that, it'll actually walk us through it. And it'll say buy. And so it's going to submit this order as a buy at 13 cents or better. Now we got to think of what's better. If you're going to buy something, what's a better price? Well, better price is going to be lower, right? And so it's going to say buy it at 13 cents or less. Is that what we want? Yeah, that's our target. We want to not kick in until it's 13 cents or even less than that. So that one's good to go. That one's good to go. What about kind of our stop up here at $1.20, right? Is that one good to go? Buy that with the limit. Well, if we come over here and click on that, obviously we haven't changed anything, so it's going to say the same thing. It's going to say submit this order to buy at $1.20 or better. And what's better? If you're buying, it's going to be $1.20 or less. Well, think about that. If we were to send that off and get filled at 65 cents, then is it currently less than $1.20? Yes. And so that target or that stop loss would be filled immediately. So we get in and out. So that's not the right setting. And so actually what we want is a stop. So we want to do a buy stop on that. And just to verify, let's click on the gear here now. It does say, submit the following order to buy when the mark is at or above $1.20. Is that what we want? Yeah. We're saying don't get us out. If it's going south on us, meaning we want to buy this back at a lower price. But if the price of the option is going up, it's going against the way we want it to go, then buy it back, but do not buy it until it's at $1.20 or higher. All right. And so that's what we want. So we have the order correct, but I want to just talk about some of the risks of this. And I mentioned this before, that sometimes we get into a trade and we sabotage it, right? We don't think we don't intentionally sabotage it, but we can. And I've seen a lot of people do it where, if we set that stop loss in there at $1.20, what would it have to do for the stock to hit that? And there's lots of different ways we could look at that. But one of the ways that I like to do it, and I want to just demonstrate in this class today, is using the theoretical price. So with the theoretical price, if we come up here to where it has this column where it has delta gamma, you may have something different. You might have last X or something like that in there. But we're going to click on that and just select a theo price. And it's going to actually open up this box over here, which will allow us to manipulate the price and say, okay, if this, then what, right? And we have a couple options to do changes we can do. We can change the time here, meaning as time goes by, what happens if we go May 1st, May 2nd, that kind of thing. And then we can change the price. What if the price goes up, or what if the price goes down? And then we can change the implied volatility. Now, quite honestly, oftentimes I just leave the implied volatility alone. Don't make major adjustments on that and just play with the time and the stock price. So as an example, let me just show an example here and then we'll get into our vertical. As an example, like right now it says this 93 put, or let's do it on the call side. This 93 call is worth about, well, the ask is 330 and the bid is 320. Now you'll see this is 325, and that's just picking the mid spot between the 320 and the 330. But that's the mark, and here we have the theoretical is going to be the same. All right. And so this is what we're looking at. This is the pricing. This is theoretically, this is what the price would be. So let me go up here. I'm going to click on Theo price. Let's keep an eye on that 325. So if the stock were to go up, I'm just going to punch in $5 and I'm going to say in a couple days, like let's say the 7th, so about a week, right? What would happen? Well, that 93 call that we were looking at would go from 325. Did I get that right? Stock goes up $5. Get +5. Goes to 270. That option goes to 275. Wow. That time decay is really eating into it, isn't it? 275. I mean, it's still making money. Not 275, but 275 it's not. Wow, that's interesting. It's dropping down from 325, 320 down to, wow, okay. Drop this down. So this is interesting. You can always, there, did it get it go? Okay, there we go. It had a plus. I thought they would jump in there. I was like, that shouldn't be dropping down. I thought, wow, that's a lot of time decay that's hitting that. All right, there we go. $5 worth of plus. Here, now it set it. So the 93 went from 325 up to 640. All right. And it also happens on the downside. And now I got to punch in the negative on that. Negative, let's say it dropped down, let's say $2. So $2 drops down over a week. Then, or what if it even drops down $2 tomorrow, right? So it would be May 1st. So in $2, that 93 would go from the 325 down to 218. And so you can see the loss. You can kind of play this what if game on that. Now the challenge here is we don't have it set up to do our vertical, right? We're looking at, what was it? A 90, we have all these, oh, got another trade in here. I gotta get rid of that one. That was the one that we were just playing around with. Let me delete that. All right, so we had the 93, 91, didn't we? 90, no, 90, 92, 90. 1990. So let's do this. The way we can actually create that is go up to where it has spread. You see where it says single here? I'm going to change that, and I can change it to vertical right here, but that just gives us the single strikes, meaning a 91, 92, 90, 90, 91, 91, 92, 92, 93, and so forth. But we skipped one. And so we had a 90, 92, and we don't see that here. So what I need to do is go actually not just to vertical, but come all the way down here to deep and wide. And we want to go 1 month, so it's still the same month, but I want to go 2 strikes on the vertical. Did everyone see that? Once again, come down to deep and wide and go to 1 month, 2 strike vertical. And that will skip it. So now we have the 90, 92, and that's what we are looking at right there as our trade. So here's the 65 cents we were talking about, right? So that's a theoretical price, of 65 cents right now. So looking at the chart, let's go back to the chart. Let's say the stock just in one of these days came back down to support at 90 here. So all the way down, let's say 90 and a half. So where is that from where price action is now? We're at 93.80, so that's about $3.30, right? Let's just say it's down here around 350. So let's say the stock loses $3.50. It'll be down here somewhere. Again, it won't be wrong. It'll just be closer to the support level, right? But here's what happens. So what we want to do is come into the theoretical price, and I'm going to say, what happens if the stock drops down? So we can go negative 3.5, enter. And then let's look over that Theo price. And so that Theo price for that 90.92 is $1.04, $1.05. It's getting really close to the stop loss that we would have placed in there. Now, of course, we might have some time go by, which would benefit us some, but not a ton. You can see it's still right there, right there. What if the stock were to go down $4? We're getting real close. So even just a little bit more than that would probably stop us out. Went to like maybe 425 or so. Yeah, it's getting close. Yeah, let's try 450. Will that get us there? Yeah, it's probably gonna get us there. We'd probably get, 118. If I even just came back a day or two, it'd probably already be right there. 118, 119, right there. So about $4.50 would actually be real close, if not trigger. It kind of bounces around as it's doing right now. It could potentially trigger the stop on that. Now going back to here, let me show you one thing right here. It'll tell us what's the price on that. The price would be 89, 37 would be the resulting price of a $4.50 drop from where it currently is. 89.37. So, is it possible it could drop down there? Yeah. Could it have a tail that goes down there? Would it be wrong? What if it just went down there intraday? Could it do that and then come back up and close? I mean, this one got down to just almost, a little bit above that, right? So here's the point, is it could go down there, trigger us out, and yet there's nothing wrong with the position. There's nothing wrong with the position. So it would just kick us out, and then, we're sitting on the sideline looking at this loss, and we're altering that probability too. Because getting down, what's the probability of touching? In fact, let's do this. Let's change this back. So we looked at what the potential move is, right? Down to about 89, 90, that ballpark area is where we get stopped out. I'm going to change this. Let's just go back. Do I have it in here? Maybe I don't have it in here. No. I'm just going to grab one of these. I'll grab like the gamma. And what I want to do is come down here and do probability of touching. And look down. Oops. And let me change this back to single. So I get single saying, okay, what's the probability of it touching around that 89 area? Well, we got a 47, 56, somewhere in that 90, 89. That's kind of the ballpark we're talking it coming down to uh, to possibly hit where our stop loss would be, right? And we're somewhere between a 47 to 57% probability of getting down to that. And so here's the thing, by setting that stop loss, all of a sudden our trade, which we hopped in thinking we have this like with the 36, it's like a 64% probability of being successful. Now I changed it to like a 48, 45% probability of being successful without even thinking about it. And so got to be careful about placing it. And that's why a lot of times on these, I like to just watch it, right? So let's do this. Let's go ahead and remove. We're going to delete this. We're going to delete this. We're going to delete both those. Still want to set this trade, but, and we can still set, we can still set a target on there. The target's fine. But let's do first trigger sequential. And then we're going to do create an opposite order. And we're going to make that as, let's do that 13 cents. Take 20% of the, 80% of the profit, right? Good till cancel. And then again, to check that, saying submit the following order, buy it back at 13 cents or better. We're good to go on that. Okay. And then confirm and send. Check that out. Okay, we got everything, no red notes in here. We got our contract 7 and 7, 455 potential profit, 945 potential loss. Send that off. And that should fill pretty quickly. So then when you have two trades on there, now notice the funny thing about this is that we're getting in there at, or hoping to get in there at 65 cents. That's actually even a better spot because we have the same amount of days till expiration as we did when we hopped in last week, but we only got 49-cent credit for each contract. And so we're getting quite a bit more credit today, as long as we can get that one to fill. Even if I brought that down to 60, then we'd still get quite a bit more than what we had last time. And so we'll watch and see on that one. All right. I just want to make sure I'm not missing anything. It looks like you guys are still good. Let's see. Mickey says that is the tough thing when these types of stocks is it will probably touch your amount and then go back. Yep, exactly it. Mickey, good call. Good call. And that's what I'm trying to save us from, right? Because again, sometimes we think, well, gosh, this is a good idea. And theoretically it is, but without thinking through it all, sometimes it can backfire, right? Let's look at a couple more. Let's see. See if we can get one more in here. Oracle or LCL. Don't need any in there, do I? This one's interesting. So I was looking at Oracle. Let's see how the numbers are shaping out on this one. So it's had a big drop. Now this horizontal line is at a very long-term support level. Let's go back to like a 3-year weekly. And you can see this has been there for a long, long time. And a lot of times what I like to do is actually change the color on that, put it blue or something. So I know when I see a blue line, that's more than just like a yearly chart. That's coming off of a significant amount of historical data. And if I were to go back even further, you'd see it bounces off even further, like a 5-year chart. And so very strong support level right there. And it came down and bounced off that. And so that was pretty significant then. And so now it had been in a downtrend, but now what are we starting to do? Well, it's starting to work on, here's a high. So we're making kind of like low, high, like lower, low, lower highs, right? But then right here, this is a little bit higher than that previous one, and then we come in here, some lows. Well, it's kind of higher. We got a little hiccup in here, but it's about the same or a little bit higher. But then this one's higher. So we're starting to get these higher highs, higher lows. So we're starting to see the beginning of a potential uptrend, right? Starting with the higher highs, higher lows. And so when we pull back, we're going to anticipate this low to be higher than the previous one and a bounce on up. We look at the RSI, is saying, hey, we got some bullish momentum. The lows on that are increasing as well. And so we got some bullish momentum and we could potentially see it bounce there. So we got some energy coming into this. So let's just see if it gives us an opportunity to make a play. And one more thing to throw on here is our good old Fibonacci's. So we'll pull that from the low to the high. And what do we see? I'm going to zoom in on this so we can all see very clearly. Now, where are we at? We're at that 50% retracement. This is the ballpark where we'd anticipate some sort of bounce, right? So now, would it be nice to see it bounce already? Yes, but we got to teach, when we teach, we got to take what's there at the moment as example trades. And so we're going to take this, even though it might be nice to see a close up, kind of up above some of these bodies, even wicks to give us a little bit more of that surety that the energy is still coming in. Let's go ahead and see what we have though. We're around what, 161-ish on that support. So we'll go over to the trade tab and looking at Oracle. So the May 15th, a little bit tight, 22 days on the 22nd. That's maybe a little bit tight. Let's see what we got on the 29th and see if we can make something work there. So we got 29 days till expiration. So we're trying to get to that roughly at 30 to 40 day. I mean, I could go out to the June 5th. Just thinking, I want to see if I can squeeze it out in 29 days versus 36. And so let's see. So we're at 161 with support. So honestly, 160, even though it's a 40, we could go with that 42 delta, which would give us a 58% probability. We could drop it a little bit lower if we wanted to. Maybe, you know, a 130, you know, we could do that 157.50. Let's try this. Let's see what the 160 is doing, because we do have that support level there. And so we're kind of combining two worlds here of that technical support versus the probability, right? So I'm going to hit the bid on that. Then I'm going to hold the control key down, and I want to go with the let's go 5 wide. Let's see what 5 wide does. Okay. All right, $2 credit. Let's lock that in. So we're going 5 wide here, 160, 165. We have a $5 risk minus a $2 credit would give us a $3 risk. Right? So we're about 66% on that, right? Because $2 divided by $3 is going to give us 66% return on risk. So so not bad, not bad, not bad on that. It's a little bit higher because we are going with a little bit higher delta on that again, but we're looking at that as hoping the support will hold up there and give us a little bit of a bounce on that. So with that $3 risk, we're going to go, well, 3, we can figure that out in our heads, can't we? But 1,000 divided by, 300, or 10 divided by 3, it's about the same, is going to be 3. So let's pull this down to 3 contracts. All right. And we're going to go ahead and send that one off. And if we wanted, we could do this. Let's do this real quick. Let's do first trigger sequential. We'll do create opposite order, just to follow on with what we did earlier. I'm going to make sure this is good till canceled. I'm going to say buy that back. And if we do it, we're doing that at $2. And we're going to buy that back times 0.2, which would give us basically 20%. Meaning we took off 80%, that's 40 cents. So we can do this at 40 cents. Get the decimal in there. There we go. 40 cents, good till canceled. And again, if you ever need to check it, just come over here to the gear. Come on, click on that. Buy that back at 40 cents or better. And that's what we want, right? Let's say, don't do that until we're at 40 cents or better. Hit the confirm and send. No issues there. Send that off. Now one just got filled. Let's see. All right, we got our position on. Nice. All right. Last thing I want to show you is, do remember we do have that workshop going on tonight, but also one of the things that's come up quite a bit, and as we've been looking at these Fibonacci's and stuff, is I've been creating an awful lot of shorts that go through this Fibonacci's. It goes through a lot of candlestick patterns. Go check these out. Go over to our Trader Talk channel, look at shorts, and I have like these are 180 seconds or less. Some are like 120 seconds. They're very quick. Going over, what is a gravestone doji? What is a dragonfly doji? What is dark cloud cover? What is it? And I've been doing this textbook versus reality. What is it they say it should look like in a textbook, and what do we typically find on a chart? So go check those out. I've just seen a lot of questions come through. I think a lot of these will help answer those questions. And once I get done with the candlesticks, then I'll go into a lot of the price patterns and review those. But go ahead and check those out. All right, and then one other thing, do like and subscribe. If you haven't subscribed already, please hit that button and subscribe. Join us in these webcasts as a subscriber. It just helps with letting people know our company that you value this. And so please do that. And then lastly, give Ben a thanks for joining in on this. We appreciate him. And yeah, he does a good job, so appreciate that. But hey, thank you for joining me. We're going to follow up on these next week. We'll look at what happened, and continue to manage these trades. And hopefully, I shared some thoughts with you today that are important. Kind of brought an aha moment that wow, I need to be thinking about this when I'm placing those trades. All right. All right. Yeah, just making sure I didn't miss anything. Oh yes. By the way, real quick, we do have tomorrow is a National Investing Day, so we're gonna have some special, very special webcast tomorrow. Been through a link in the description or in the chat, sorry. So go ahead and click on that link, register for that, because tomorrow is going to be a big day. We're going to have lots of webcasts with multiple different presenters in there. We're going to have our coaches plus a different department. We've been working on this for a long time, so a lot of good stuff in there. So join us for that tomorrow. But until then, have a great one. We'll catch you next time. All right, we'll see you.